Is now really a good time to buy real estate? Everyone's saying that market might be crashing, recession might come. That's what the news is portraying, doom and gloom. But on the other side, real estate specialists, investor specialists are potentially saying it's a good time to buy. What's the right answer? Hello, everyone. This is June here from Caliber Wealth Management and Caliber Mortgage. Welcome to my channel, Wealth Knowledge CA. Just wanted to make this video today to really clarify and get to the bottom of the numbers and the situation. I think at the end of the day, everybody have their own opinion on what what's right and what's wrong. But we have to really look at the situation. Many clients out there, they're renting, rent has gone up. They're paying, close to $3,000 a month to rent a place. And with those kind of numbers, it might actually be a good time to buy. But of course, we have to look carefully at the numbers and look at, from those numbers standpoint, whether or not it is worth it to buy. And so we always tell the client that we don't want to do it based upon only trusting somebody, but the math itself doesn't lie. And once you can confirm the math makes sense, then you proceed and go ahead with that big purchase of buying your first home. So let's take a look today. I'm going to show some mathematical numbers to you guys to really break down the options and kind of give you a better perspective on the situation. So come take a look. We're going to check out my computer and take a look at those numbers together. Okay? Give me a moment. So let's take a look at these numbers together. So we can see here that before the rate hike took place, purchase price of a property we'll use in this example was $1 million. And so at $1 million, if client wanted to buy the house, you can put less than 20% down, but in this example, we're just using the 20% down client here. And so once again, the numbers have to make sense. So at 20% down, we have 200,000 down, which makes the mortgage 800K. And at 800K at that time, before the rate hike, 5 years fixed, for example, was 1.99, which on a monthly basis works out to $2,953. So if after the rate hikes happened, it put a lot of pressure on the price. Not many people can afford too much financing anymore. So now in the market, the same houses, in this example, instead of $1 million, you can very well find 800,000. If you find the right opportunity and the client, person selling the house may be in a difficult situation and you pick up a good deal. This is why it's so critical to have a good real estate advisor team. If you need one, let us know. We can connect you. But if you're already working with someone or realtor partners out there who are trying to help clients and kind of discuss this structure as well. So 800,000, let's say, is the purchase price now in today's current market, which means we're going to put the same down payment, 20%, 160,000 down. So right here, we're saving $40,000 differential, which makes the mortgage 640,000. Currently, right now, we can get a 5 years fixed, potentially even better than 4.99, maybe even 4.89 or better. But I just wanted to use 4.99 just to be a little conservative. And so that makes the monthly payment $3,432 in this example. That difference between the previous and now is $480 per month. Over a 5 year fixed period, you're looking at roughly $29,000 in more payment in the new mortgage because of the increased rates. But if you look at the math, because we didn't have to put that $40,000 down, that money is actually sitting in your bank account. So minus that money, imagine you use that money just to help you offset the cash flow. This would then still be net pocket in your pocket, $11,270. And remember this, that house in the old way would have cost you $1 million, which you're owing 800K. But in the new way, you're only owing 640,000, right? And so you have an $800,000 property. And what you have to ask yourself is, in the next 5 years, do you think property values will go down over a 5 year span? In the long run of things over market history, in general, a lot of clients will feel that value should go up over time. And we also have to look at the support of the environment. If you do your research in the next 3 to 5 years, how many new people, immigrants, are coming to Canada? It's probably in over the million mark. I believe it's hundreds of thousands per year. And so I think the numbers are around 50% of people coming into Canada will come into Ontario. So if you're buying a property in Ontario and you have that kind of support demand over the next 5 years, do you really think your value of your house that's $800,000 today will stay at $800,000? That's what you have to ask yourself logically. And then also too is if you are a first-time home buyer and right now you're renting and paying somebody else's mortgage, wouldn't it be nice to put that cash flow to take care of your own property, to build your own wealth? At the same time, in case these numbers are uncomfortable, because you can find better opportunities in real estate now, better deals. Maybe buy a house that has a top and a bottom where you have a basement rental income, or buy a little bit further from GTA so that you can buy a duplex or even a triplex and rent out the other units to build more cash flow. There's a lot of opportunities to build your wealth, have your own place. It may not be your dream home, but at least it gets you through the door and gets you kind of moving toward the future. And so I definitely think from the numbers standpoint in this comparison, it absolutely makes sense to buy. But once again, all of the advice that you get is not applicable for everyone. Everybody have their own situation. So you have to sit down with a specialist to look at the numbers logically first. And then once you know what your buying power is, what you're capable of getting, then we partner with a real estate advisor to get you the best bang for your dollar and get that property that is good value for your family to enjoy and also build your wealth in the future. So if for investor clients who have been kind of leery as well, look at your numbers, see what's available in the financing. There are a lot of ideas and concepts that many clients are not even aware of, that Caliber really are experts in helping clients to look at those angles and exhaust those angles. So, come have a coffee with us, have a meeting with us, lunch with us to kind of discuss more options as well. So you can kind of see what's available on the table in terms of the financing, then partner with your real estate advisor specialist to really attack the market for those great opportunities that are coming. Are there clients out there that the rates have gone up and they cannot afford their house anymore and they have to let their property go at a very steep discount? Absolutely, it's coming. And so the people that are doing well or position themselves now well during this upcoming potential recession or down market for certain situations, you have to get yourself ready. And so if you feel this information was valuable, you found it useful, please leave a like. Also give us a follow. More information and strategies to come. And if you would like to kind of take a look, review your situation, your financial position, get a second opinion, leave a comment as well, send me a message and book a time and we can look at your options. Okay. I just wanted to thank you for your time. It was nice speaking with you guys today, and take care. See you next time. Bye-bye.